Okay, so if you've ever been around the world of finance, you've definitely heard these two terms thrown around: accounting and financial modeling. And look, I get it. They both live in spreadsheets, right? They're all about numbers, so it's super tempting to just lump them together and think, same job. But, and this is a big but, they're not. Not even close. In fact, they look at a business from completely opposite directions.
So really, is it just the same job with a different name? The short answer? Nope, not at all. And figuring out why is so important. Because these two things, they're like two sides of the same coin. You really can't have one without the other. So let's dive in and break this whole thing down.
All right, here is probably the single best way to think about this. An accountant? They're the historian. Their job is to meticulously, carefully document a company's financial past. But a financial modeler? They're the futurist. They take all that history and use it to try and predict what's coming next. You see the difference? One looks back, the other looks forward. That, right there, is the entire game.
Okay, let's start with our historian, the accountant. I want you to think of accounting like the rearview mirror in your car. It's absolutely essential, right? It tells you exactly where you've just been. It gives you that perfect, crystal clear picture of the road you've already traveled.
And that's the thing, everything about accounting is backward-looking. That's its whole purpose. The job is to create this verifiable, totally factual record of what has already happened. It's all about capturing the past with, like, surgical precision.
So what does that actually look like day to day? Well, for an accountant, their entire world revolves around two things: accuracy and compliance. They've got to follow these super strict rules, you might have heard of them, GAAP or IFRS, and their main product, the thing they create, it's those three core financial statements: the income statement, the balance sheet, and the cash flow statement. These things are basically concrete historical documents, and they all answer one single crucial question: what happened?
Okay, so if accounting is our rearview mirror, what's financial modeling? Well, it's the windshield, and maybe even the GPS too. It's all about looking ahead, seeing the road to come, and trying to map out the best possible route to get where you want to go.
And the key words here, you really got to remember these, are forward-looking and assumptions. This is the huge difference. See, accounting deals in hard, cold facts from the past. Modeling, it's all about making smart, educated guesses about what the future holds. It's really a blend of art and science.
And with modeling, the focus does a complete 180. We're not talking about compliance anymore. We're talking about strategy. The output isn't some static, boring report. No way. It's a dynamic, flexible spreadsheet that you can actually play with. And that's because a modeler's job isn't to ask what happened. It's to ask what might be the most powerful question in all of business. What if?
What if we hire 10 new salespeople? What happens if a new competitor just pops up in our market? Or what if we just increase our prices by 5%? These are the kinds of strategic questions that a financial model is built to answer. They help leaders make those really tough, critical decisions about where the business is headed.
So, okay, it's easy to think of them as total opposites, right? Past versus future, historian versus futurist. But here's the twist. They are absolutely essential partners. They need each other. You simply cannot have good, effective financial modeling without rock-solid accounting.
And the reason why is pretty simple. It all comes down to that classic saying you've probably heard: garbage in, garbage out. Think about it. A financial model is only as good, only as reliable as the historical data you build it on. If your accounting data is flawed, if it's garbage, then you're not going to get a forecast. You're going to get a fantasy.
So you can really think of it as a clear 1-2 punch. Step 1, great accounting gives you that rock-solid foundation of historical data. And only then, step 2, can a powerful model take that data and actually chart a meaningful course for the future.
Here's a super simple way to see that partnership in action. The accountant comes in and states a fact. Hey team, our revenue last year was $5 million. That's the history. Then the modeler steps up, takes that fact, and asks the forward-looking question. Okay, great. So, how do we get to $7 million next year?
So, at the end of the day, what does this all boil down to? It's actually pretty simple. You have to know where you've been to have any real shot at deciding where you're going.
I mean, it really is that straightforward. Accounting is that indisputable record of your journey so far. It tells you exactly where you're standing right now with perfect clarity. And financial modeling, that's your map and your compass that you use to plot the next move. And to navigate the wild world of business, you absolutely 100% need both.
All right, so now you get it. You know the fundamental difference between the historian and the futurist. But that brings up a really interesting next question, doesn't it?
If modeling is all based on assumptions, what's the difference between a good, reliable forecast and just a wild guess? Well, that's a story for another time. Thanks for tuning in.